Hope you're driving somewhere good. All right, we're off and running. The stream is up. The recording started. Happy Wednesday. That's a good point, David. The farmers don't need it. None of the cows wear watches. Yeah, I think we're at a point where we don't need that kind of stuff, right? We can just sort of adapt. Anyways, all right. Circadian rhythms. All right. There you go. That's the science behind it. Good morning. Welcome to the midweek check-in. Here's the disclaimers. We're not brokers. We're not advisors. We don't give advice or recommendation. And this is for education, illustrative purposes only. What are we going to do? We'll look at today's opening analysis, a glance at our posture to see if it's holding up. Is anything shifting? Mindset for trades. Futures are showing just a bit of a hiccup today. Marginal down means nothing. The news came out. We'll talk about the news. We'll go through the watch list and we'll mention the trading plan. See how the progress. Circadian. Circadian. All right. Arcadian sounds like a alien family dynasty, right? The Arcadians. Is that what it is? Isn't that from Dune, maybe? I swear that's what it is. Okay. All right. Let's talk about what's going on. That's not updated, is it? I don't think so. Okay, so let's talk about news first. Economy grows slower than expected, but still growing. Let's talk about what that means. Because both of these things are going to be relative to the Fed. Right? So, yeah, I don't know where these 3.0 and 3.1 numbers came in. The article I read was talking about 2.9. But it did not meet either of these expectations, right? The 3.0, no. The 3.1, no. We got 2.8. It's growing close to 3%. So, yeah. What happened to the ADP report? Expecting 113, a drop from 159. We got 233. Right? 233. So, what else is going on? It's been interesting, right? Have you guys been paying attention? Look at this consumer confidence number. The consumers are strong, which is always a good sign for the market, right? When the consumers are strong. Job openings dropped considerably. This is now easing back into, let me see if I can, lowest level in 3.5 years. Where is the historical? Oh, I can't find the historical here. Anyway, yes, it dropped, but no, it's not terrible because it's back to where it was prior to the pandemic, basically. So it's like maybe we're starting to see that. I don't know. I think this is pretty interesting. So the GDP fell a little short, but the jobs are still good as far as ADP job growth shows, but the job openings is decreasing. But it's not decreasing to a problematic area. It's decreasing to where we were prior. Nothing for me so far. Has been problematic about what I've seen here in the news. Elections. Yeah, the elections are going to be interesting, Miguel. I mean, this is just such a very close race, at least according to the polls. There's just my understanding is shenanigans on both sides already from a legal standpoint, which means don't expect there to be certainty quickly, right? Like the next day we're like, okay, here it is. It's like, and then the lawsuits, and then it's like, and so the market does not like uncertainty. If somebody is elected, the market doesn't care who. I know that there's like a narrative like, oh, it's because they think it's going to win. That's not, none of that's true, of course. Anyways, all the legal stuff is who can vote and which vote to count, right? But like you've already got where there was like a batch of early votes sent in that were sent in wrong, and they ruled that that those people can now go back and vote because their vote didn't count. And there's already challenges like, no, they don't want them to be able to. That's like, so, well, their vote didn't count. If they did it wrong, they should have the chance to correct it since there's plenty of time. Those types of challenges, right? Where you're going to be like, just everything. It's going to be a nightmare. That's what I'm predicting. It's going to be a nightmare. Thursday, read somewhere some ballots burned. Ooh, I didn't hear that. And what can you trust? Income, supposed to take a tick up, spending a tick up, PCE month to month, up a tick, PCE year over year, down a tick. That was in Washington State? And did they burn, like, irretrievably, like, ballot boxes? Someone lit them on fire and just lost all those votes, and no one knows whose votes, and they were lost? That is outrageous. Was it arson or accidental? Now I'm like, beyond recognition, arson? Wow, how come I didn't hear that? Maybe I don't read the news enough. I don't know. And then jobs. So we've got a big rest of the week. Income, spending, PCE, and then the jobs report and unemployment. Anything else on that? I mean, it's a heavy last couple of days. So today could be massive week, right? Today, I would say, I wouldn't be surprised if we're just sort of, a meandering day. Not a lot of momentum. It's just kind of waiting to see this bigger information come. The ADP report, very strong. The GDP report, not as much. But that does lead then to, here's our Fed. Let's go back. Let's reload. Remember that next week is the election and the Fed. It's like things are just ramping up for the rest of give us what we need for the rest of the year. We're at 95% for a cut. That's an improvement, right? A month ago, 65, 91, 98. Okay. With the PCE year over year coming down, the Fed has license to do that, and with the GDP holding up or easing a little bit, I would say that they're going to want to hit it again. And then we have December, and in December, so it's no one's looking for any more doubles. That's for sure, right? This is a quarter from now. So 72% of people think we're going to get another quarter in December. 27% of people think we're only getting one between Whether it's one in November but not December, or nothing in November but yes in December. That's what's going on. I think that's reasonable. I still think there's a good chance we get it too. But I definitely think we're going to get it in November. Then they're going to watch, and then we'll see what December brings. I agree with that, Stephen. There's no need to go faster than that, right? Why would you? Doesn't need to be. Quarter point each. Let it coast into the new year. See what it looks like. That makes sense to me. All right, let's go look at the. Let's go look at what's going on. We'll start here. I'll tell you what I'm curious about is the VIX. Okay, I'm looking at the news that you put in. With just days, hundreds of ballots were destroyed by fires. 2 ballots. They're searching for a culprit. Many of the ballots were unaffected, but hundreds were destroyed. Interesting. Just a saboteur, huh? I mean, like, what would be the end game of that? If you have no idea what the votes are inside, what's the I don't know. What's the end game? That's baffling to me. Okay. Where's my watch list, you guys? So the SPY is down 0.04. Disruption. That's it, right? A slight disruption. It's really not, though. You know? Washington's not really up for grabs, is it? It'd be like doing it in Utah. No one cares. No one. It's all pretty expected, the results we get here. Let's look at our opening range. I think this looks great. It's a blue state. Yeah, I mean, burning some ballot boxes there doesn't seem like it's going to change anything, right? Just like it wouldn't change anything if someone did it here. So there's the open. Honestly, just still feels pretty good in line with what we had yesterday. I'm fine with that. I think that us looking for opportunities still makes sense. Let's go to the VIX. The VIX is going to give us some clues. Okay. So we said in order for this to be a lower high than this, we need this thing to turn over and we need to take out these lows. It may not be today, right? If you remember yesterday, I'm like, we need to take out this low tomorrow. And then that confirms. All of this is still just sort of hovering around without having actually rolled over. This looks like it's rolling over, but not when this is up here. Oh, so we're still watching. We're still waiting. I don't know that we'll see it today when we have so much news tomorrow and Friday coming. That's really what the market's. I mean, the market's not like, oh, we really want to know about GDP, which gets recalculated and reviewed and updated regularly. I mean, I know jobs numbers do too, but not as often. GDP is constantly getting revisions and updates and stuff. So GDP and ADP number is not nearly as significant as PCE, which is the Fed's favored inflation report. And as long as that ticks down, then all doors are still open for the next cut. And non-farm payrolls, which Department of Labor numbers are considered stronger, more reliable, as well as the unemployment. Yeah, that's a lot coming out. Massive week, like Press said. Let's get to the top of the list, work our way down. Whoops. Let me get my order. Oh, actually, real quickly, let me go back to the SPY. Let's just talk about posture. There's Monday, there's Tuesday, there's Wednesday. Anything happening here? No. Short-term score seems exactly where it is, where it's been. If all of a sudden we broke down, would that change up? Yeah, that would change a lot of things if all of a sudden we broke down. That would change this score, the VIX score. I mean, a lot would change. I'm not expecting that, anticipating that. I think that everything looks like it's going to bounce. Certainly, what we're saying is if that happened, that would be a disruptor. And then we would have to adapt to that. That's not something that we are actively thinking is setting up and predicting. Let's go look at the long term. I drew a line in the sand. It just happens to also be that green line. If we drop below that green line, I'm going to shift my score to the red line because I think that that's more indicative. If you look at the tops of these two here, right? If I were to just duplicate this or activate this and move it up, I want you to notice how perfectly it touches those, right? That's the slope. If we bounce down from here rather than accelerate up from here, then I think we're more likely to that. And I'm going to take a quarter of a point away. I'm just going to delete this because I don't need it. But as of now, it's holding up. Still good. Okay, let's go to a quick volume check. These two are about to drop off. I've been doing this for so long. It's like you just don't think about doing things. And that's why it's so great to have a group. Because then Miguel's like, you could just like do this and then it just sits there and you don't have to every time go through it. And I'm like, at first I'm like, oh, Miguel, you show off. But then I'm like, yeah, he's right. That's pretty smart. So you can see it. This one will be interesting. We had a little conversation about it yesterday, and I said that today is going to determine. That's an above average volume day right there. It was a positive day, and so the natural instinct was like, yeah, let's give it a score up. I said, for me, it's not enough. It was only up like 0.16. On top of that, I said, I want to see the follow through. If the follow through is a bullish day and we end up here, even if this day doesn't have volume, I'm going to go back and be like, yes, that's a buying day. If it sits inside of, right? So here's the range here's the low of the day, here's the high of the day. If it sits inside and can't get out of that, then I'm going to say, you know what? That wasn't buyers. There was no follow through. I'm going to copy this here and move it over and say that's a tie. It'll be interesting. Today, it could still happen today, right? We could easily end up 0.5% by the end of the day. And I'm like, all right, there it is. And I'm going to make that for the buyers. And then that'll change how we score it. So we'll see. At the end of the day, it can only stay the same. If I give it a tie, that doesn't make my score worse or better. It just stays the same. If I give it to the buyers, it's going to make our score better. So it can only stay the same or get better. We've got 2 more days. So these 2 days are going to fall off by the time we get back here, right? And I'm not going to count either of these. Well, this one will be gone. This one I think will actually still be there because tomorrow we'll get Friday and we'll still have Friday and this one will still be there. But when it's way back there, I'm not going to count it. So it's going to be sellers, tie. We have to be careful. The volume right now is just a little bit of a negative lean, even though it still has a little bit of a positive slope. And the VIX, no change. So as of now, the posture is holding up. For me, it can only get better from what we've seen so far, unless, obviously, something significant happens. Okay, let's hit the watch list, get through, see where everything stands. I need more chart. Apple. Okay. So if you gave Apple a shot, it looks like it's just about out. I mean, I would still maybe see today. It's really kind of flat, but it's just not doing much. Aflac would be given a buy signal if it weren't for the fact that it's reporting earnings today after market. And then they have a call in the morning tomorrow. So you're trading right into it. Amazon, so that was the other one. So when I talked about, are we okay to put trades on 4 days before earnings? If you did it with Apple and you put the trade on here, you'd probably still be slightly profitable. If you did it with Amazon here, when this turn came, it'd be okay. I mean, it's already dropped from today's high, but that's why I'm willing to do it. Implied volatility is very stable during that window. In fact, it actually tends to go up during this window. So yeah, I don't hold through earnings, but I love 5 to 7 days before earnings. Actually, APO still valid. This one still has time before earnings, I think. App gave the signal back in this area here. Still has a little bit of time. I don't know. Now I feel like you're chasing the trade. AXP. AXP is on the docket. It turned on stochastics yesterday, but still had an inside day candle, a Harami candle. Today we're seeing it move. Now, if it drops back down here by the end of the day, well, then that's no longer a viable signal. We're not convinced 13 minutes into the day. I'm waiting to see, does that hold up? Bank of America gapped down but recovered. That was an interesting little move. BK is one I think I'm still thinking about it. BX still looks viable. So there's still the financials are a little shaky this morning, but overall I would say there's still viability in the sector. Caterpillar, another reason why we tend not to hold through earnings. What did they get? They missed, which is never good. Chipotle made it. They were looking for 25. They got 27, but they must have lowered guidance, and that never bodes well. Coherent, I thought yesterday looked pretty good. Today it's kind of just not there. You're getting close to earnings. This is a new one. I never actually pulled the trigger, but was just watching this. I don't know. We'll see if we continue to watch it. We might bounce it. The Dow's still just kind of flat, setting up. Fastenal, okay. Well, it's the day is iffy. This thing's trying to push. We know we need it to break that 78 level to open up some territory, and just kind of watching to see if that happens. Fidelity National Information Services. It's got earnings. Be careful. Bitcoin on a little bit of a pullback. GE Vernova hitting some resistance maybe. Whoops. Oh, we'll get to Google. Gold, a little overextended. Google smashed it on their earnings. Looking for 183, got 212. Big ups to 6%. Goldman looks viable. Home Depot, a little iffy. Be careful. Robinhood. Earnings come out today after market. IBM, the dust is settling. We'll see. I'm not seeing any new trades yet. I'm seeing some things that are like maybes. They got to hold up It looks like it's primarily around financials. Yes. KKR. We just had a nice one on that. Slow and steady. The signal came here. Of course, we want that. That was what I was looking for. But I got this, and that worked out great. All the way up until earnings. Got out. It was a little slower and a little less, but it still worked out well. Then it did all this, and now what? Now we had a higher high, higher low setting up. If it turns, giddy up. Financials, though. Again, financials, earnings coming out tomorrow. McDonald's, waiting for the tests to come back on the onions. Are the onions good? We'll see. And of course, paving the way. It's morning. I don't want to disrupt press's morning, but we all know the great event coming this Christmas season with McDonald's. Meta looks strong. That's another one that got that right? We talked about it there, turning up. That's a nice little pre-earnings move. You would, I did not do that one. You would have made some money on that one. I think Miguel did that one. Morgan. Iffy. In now. Yeah, love it. There you go, right? That's that pre-trade run. A little bit of vol came with it, probably. You gotta love it. Still financials. Microsoft got a little pre-earnings run right there. So this is what I want to highlight, right? People are like, oh, but earnings are so close. So what? Look what happened from here. You're like, look, but the volatility's high. Is it? It went from 29 to 34. It keeps going higher all the way up until usually, or at least stays the same. So it's actually quite a nice little window to buy options in. NDAQ. A little overextended, not much there. Netflix, maybe setting up. NVIDIA, setting up. I would be fine with NVIDIA all the way back to here, 130 about. Right? Like all the way back there. If it sets up and gives a signal, I would be willing to take it. PLTR, looking to finish the rest. I took a good chunk out already, looking to take the rest of it off the table. And then looking for the next trade. Yeah? PayPal. No. I don't know. Maybe. When did this come? Actually, yes. I'm going to put PayPal as yes. I don't know why I was so adverse. Do I care about the implied volatility in the run-up to earnings only because of the impact on the price of the options? Yes. Yes, because of the impact it has on options. That's it. Remember that all that is, press, is expectations, right? That's not predictive. It's just expectations. Expectations are ramping up. You can see it on PayPal, right? It ramps up. And then after what happens to expectations, boom, the volatility crush, right? You can see that crush. That's moving around that as expectations come and go. Has a significant impact on the prices of the options, which may impact how we trade. But like again here, you'll notice that if someone's like, oh, the implied volatility is too high, could you have done a pre-earnings trade on PayPal? Yeah. The implied volatility was high and actually ended up just a little higher right before. It just spiked up again. So you have the ability to hold all the way if you wanted to. So, right? Good trade. Okay, QQQ, no. RTX is a maybe. Southern, I think Southern is setting up. If it holds, you can see, right? If it holds, you've got earnings. So I would say you're probably more inclined to go to, that's an interesting one. Here's the SPY, still flat for the day. Tesla pulling back into a flag. Taiwan, like NVIDIA, setting up. One of those is going to give me a trade. I feel it coming. Here's the dollar, still strong as can be. The VIX, just kind of flat. Walmart looks good, setting up for a trade, I think. Okay. So let's recap. Where do we see setups right now? We see setups primarily in the financial sector. So if you're thinking about a new trade, you're going to see opportunities coming here, AXP potentially, here in BX potentially, here in Goldman Sachs potentially. These are where we have trades that are developing, trades that are on, you're starting to shut down. We had an alert on PLTR that got its profit, should be looking to close this down. We have a new alert that's out on Fastenal. That's looking fine, continuing up higher. Everything looks good from a trading front. Okay, real quickly, let's talk about the trading plan. Where is it? Section 4, everybody. How's your risk scale from 1 to 10? Are you at least a 7 with your risk management plan? Do you know exactly what your portfolio heat is? Meaning, what's the range? 5 to 15, 4 to 15, right? Are you from 4 to 10? What's your range in heat? Meaning, in the best market, what's the most heat you'll have on? If the market gets choppy, what are you going to shrink it down to? And where is it now? Those are the kinds of things you should be thinking about when looking at your portfolio heat. That's your overall portfolio view. Trade risk. Do you know exactly how much risk you're taking on any given trade? Typically, it'll be defined at the system level, right? So if I have bounce trades, they'll all have the same amount. Breakout trades all have the same amount. Continuation trades. But they might not all be the same. If I have a system that has a low frequency, which means I only get the trade every so often, but a high expectancy, that means it's a profitable trade, I'm going to give that 3% risk, whereas a bounce trade only gets 1. I get bounce trades all the time. I find them everywhere, right? So they're a higher frequency, lower expectancy. I'm going to do a lower risk. So you have the ability to dictate that. And then how do I combine that to know at any given time how many trades should I have on? How do I adjust risks, right? How do I adjust it on a portfolio level? How do I adjust it on a trade level? How do I adjust it on a management level? Risk is your game. You need to be really good at defining it at any given time. How do I correlate it to the current market posture? That's the what now. How much risk now? How much trade risk now? How many trades now? And then the next step to that is, again, always looking to be proactive. What would cause you to change that? What would cause you to change it to less? What would cause you to change it to more? So you're saying, hey, yeah, if I get to a 6, I'm gonna tack on a few more percent. I know that that's the market, right? The last time we hit a 6, we got 5 months of beautiful trading, 4 months of beautiful trading. If I get that, I'm gonna go to from 10 to 15%. Whereas if it drops from a 5 to 3.5, that might be the trigger point where you're like, you know what, I cut it in half there. Just trying to work so that you're thinking about these things confluently. What are your tsunami indicators? I mean, yours are probably mine, right? Right now, which is the VIX is the most critical that we watch regularly. We keep an eye on things like sector rotation or like major market, where if we saw like those flash huge defensive signs, we would maybe use that as a hedge opportunity. So, but primarily, I would say the VIX is it, and we can define that. And then lastly, this is an important one. It's funny because we're coming into the season. If I looked at the last 3 times I took a break, I would say all 3 of them occurred somewhere around the holidays, where something, I don't know what it is. If it's just like